Hi, my name is Shawn Trobia with AARP. Welcome to this presentation on Social Security. Keep in mind that you can pause, rewind, and fast forward the video at any time. In this presentation, we will provide a brief introduction to the Social Security program and explain the eligibility criteria related to taxes and credits. Many people think that Social Security offers just retirement benefits. In this presentation, we will see that it also offers retirement, disability, survivors, Medicare, and supplemental security income benefits. We will also provide resources that will help you obtain more information about this important subject. All peoples throughout all of human history have faced the uncertainties brought on by unemployment, illness, disability, death, and old age. In the realm of economics, these inevitable facets of life are said to be threats to one's economic security. The Social Security Act was signed into law by President Franklin D. Roosevelt. The Social Security program was created in 1935 and was put in place to make sure that income continues even when a worker retires, dies, or becomes disabled. The creation of the Social Security program was preceded by the stock market crash in 1929 and the Depression, when unemployment rose above 25% and more than 10,000 banks collapsed. The concept of social insurance took root in 19th century Europe and emphasized a government roles in maintaining the economic security of its citizens. Let's talk about eligibility. We qualify for Social Security benefits by earning Social Security credits when we work in a job and pay Social Security taxes. The credits are based on the amount of earnings. In 2011, one credit is given for each $1,120 worth of earnings, up to the maximum of 4 credits per year. The dollar amount changes each year. The credits we earn remain on our Social Security record even if we change jobs or have no earnings for a while. Our work history is used to determine eligibility in the different benefits provided by Social Security. Currently, the employee-employer contribution to Social Security works as follows. Employees pay 6.2% of their income, matched with 6.2% from employer, for a total of 12.4%. For 2011, the law reduced the employee's share of the Social Security payroll tax by 2%. Employees pay 4.2%. Employers still contribute the same 6.2%. Specific rules apply for self-employed persons. Visit www.ssa.gov and read publication 10022 for more details. The contribution and benefit base in 2011 is $106,800. This means that no Social Security tax is paid for income exceeding $106,800. Employers send both the withheld and matching taxes to the Internal Revenue Service, also known as the IRS. All of your earnings are reported to the Social Security Administration by your employer. The Social Security taxes you pay are not put in a special account for you. They are used to pay benefits for people getting benefits today, just as your future benefits will be paid for by future workers. Self-employed and military individuals earn Social Security credits the same way employees do. There are special rules about how you earn credits for other kinds of work, such as domestic work, farm work, or work for a church or church-controlled organization that does not pay Social Security taxes. Visit the Social Security website for details on these matters. Let's talk about retirement benefits. Social Security pays you full retirement benefits if you have earned 40 credits and retire at full retirement age. Retirement age varies depending upon the year you were born, as shown on this slide and the next slide. The full retirement age gradually rises until it reaches 67 for people born in 1960 or later. The Social Security Administration sends contributors a yearly statement with information on years worked, earnings, and an estimate of retirement benefits. Make sure the information on the statement is accurate. If not, report it to the Social Security Administration. They also offer a retirement calculator on their website. Roughly, the retirement benefit equals the monthly average of your highest 35 years of earnings. An important point to remember is that Social Security retirement benefits were never meant to be your only income in retirement years. It was meant to be a supplement to savings, investments, and other income you may have. Social Security also provides retirement benefits to some family members, such as spouses who are age 62 or older, spouses who are younger than 62 if they are taking care of a child entitled to benefits based on your record who is under 16 or disabled, former spouses if they are age 62 or older and the marriage lasted at least 10 years, children up to age 18 or up to 19 if they are full-time students who have not yet graduated from high school, and disabled children even if they are age 18 or older. You can get Social Security retirement benefits as early as age 62, but if you retire before your full retirement age, your benefits will be reduced based on your age. For example, if you retire at age 62, your benefit will suffer a 25% reduction. Some people stop working before age 62 and do not retire until full retirement age. Keep in mind that any year of no earnings will probably mean a lower Social Security benefit when you do retire. If you had to stop working because of health problems, applying for disability benefits might be a good option for you. You may choose to keep working even beyond your full retirement age. If you do, you can increase your future Social Security benefits in two ways. Each additional year you work adds another year of earnings to your Social Security record, which could mean a higher benefit when you retire. Secondly, your benefit will increase automatically by a certain percentage from the time you reach your full retirement age until you start receiving your benefits or until you reach age 70. The percentage varies depending upon your year of birth. For example, if you were born in 1943 or later, 8% per year will be added to your benefit for each year that you delay signing up for Social Security income beyond your full retirement age. If you decide to delay your retirement, keep in mind that you are eligible to sign up for Medicare at age 65. In some circumstances, your medical insurance may cost you more if you delay applying for Medicare. Let's talk about working and receiving retirement benefits. Social Security has an annual earnings test which could mean a reduction of benefits. This applies only to those who take early retirement. The Social Security Administration will deduct $1 in benefits for every $2 on earnings exceeding the annual limit, which in 2011 is $14,160. In the year you reach full retirement age, the annual limit changes. In 2011, it is $37,680. On that year, Social Security will deduct $1 in benefits for every $3 on earnings exceeding the annual limit. Starting with the month you reach full retirement age, there are no limits on the money you can earn. Are your Social Security benefits taxed? Some people have to pay federal income taxes on their Social Security benefits. This usually happens only if you have other substantial income in addition to your benefits. That income includes wages, self-employment, interest, dividends, and other taxable income that must be reported on your income tax return. If you file a federal tax return as an individual and your combined income is between $25,000 and $34,000, you may have to pay income tax on up to 50% of your benefits and up to 85% if income exceeds $34,000. If you file a joint return and you and your spouse have a combined income between $32,000 and $44,000, you may have to pay income tax on up to 50% of your benefits and up to 85% if income exceeds $44,000. Generally, there is no need to file a tax return if income does not exceed the annual earnings limits and the taxable limits. If you have any questions about whether you need to file a tax return, it's always best to consult your tax advisor. Now we come to another benefit Social Security offers, that is, disability benefits. This benefit is offered to people who cannot work because they have a medical condition that is expected to last at least 1 year or result in death. Federal law requires this very strict definition of disability. While some programs give money to people with partial or short-term disability, Social Security does not. In general, to get disability benefits, you must meet two different earnings tests. Number one is a recent work test based on your age at the time you became disabled, and number two, a duration of work test to show that you worked long enough under Social Security. Certain workers who are blind have to meet only the duration of work test. This table offers information on the recent work test. Feel free to pause the video if you would like to take a closer look at this slide. The table on this slide and next offers information on the duration of work test needed to qualify for disability benefits. This slide is a continuation of the previous. Again, please feel free to pause the video if you would like to take a closer look at this information. Certain members of your family may qualify for disability benefits based on your work. They include your spouse if he or she is 62 years or older, your spouse at any age if he or she is caring for a child of yours who is younger than age 16 or disabled, your unmarried child, including an adopted child or in some cases a stepchild or grandchild. The child must be younger than age 18 or younger than 19 if in elementary or secondary school full-time. And your unmarried child, age 18 or older, if he or she has a disability that started before age 62. The child's disability also must meet the definition of disability for adults. The Disability Determination Services Office in your state determines if you qualify for disability benefits. Doctors and disability specialists in the state agency ask your doctors for information about your condition, and they consider all the facts in your case. There are two ways to apply for disability benefits. You can either apply online at www.socialsecurity.gov or call toll-free telephone number 1-800-772-1213. You should apply for disability benefits as soon as you become disabled. Now we come to survivor's benefits. The loss of the family wage earner can be devastating both emotionally and financially. Social Security helps by providing income for the families of workers who die. Family members include widows, widowers, divorced widows and widowers, unmarried children, and dependent parents. As you work and pay Social Security taxes, you earn credits toward your Social Security benefits. The number of years needed to work for the family to be eligible for Social Security survivor's benefits depends upon the age when the person dies. The younger one is, the fewer years one needs to work, but no one needs more than 10 years of work to be eligible for any Social Security benefit. Under a special rule, if the person has worked for only 1 1/2 years in the 3 years just before he or she dies, benefits can be paid to children and to a spouse who is caring for the children. How about survivor's benefits to widows or widowers? Widows or widowers may be able to receive full benefits at full retirement age. The full retirement age for survivors is age 66 for people born in 1945 through 1956 and will gradually increase to age 67 for people born in 1962 or later. Reduced widow or widower benefits can be received as early as age 60. If the surviving spouse is disabled, benefits can begin as early as age 50. Widows or widowers can receive benefits at any age if she or he takes care of the deceased child who receives Social Security benefits and is younger than age 16 or disabled. Unmarried children who are younger than age 18 or up to age 19 if they are attending elementary or secondary school full-time can also receive survivor's benefits. Children can get survivor's benefits at any age if they are disabled before age 22 and remain disabled. Under certain circumstances, benefits can also be paid to the deceased's stepchildren, grandchildren, step-grandchildren, or adopted children. Survivor's benefits are available also to dependent parents if they are age 62 or older. For parents to qualify as dependents, the deceased would have had to provide at least 1/2 of their support. What about survivor's benefits for divorced spouses? If the deceased person has been divorced, his or her former spouse who is age 60 or older, 50 to 59 if disabled, can get benefits if the marriage lasted at least 10 years. Former spouses, however, do not have to meet the age or length of marriage rule if he or she is caring for his or her children who are younger than age 16 or who is disabled and also entitled to benefits based on the deceased's work. The child must be the former spouse's natural or legally adopted child. How much survivor's benefits family members can get from Social Security depends upon average lifetime earnings. That means the more you have earned, the more survivor's benefits family members will receive. If the deceased had worked long enough, there is a one-time payment of $255 that can be made to his or her spouse or child if they meet certain requirements. Now we come to Medicare benefits. Medicare is financed by a portion of the payroll taxes paid by workers, 1.45%, and their employers, 1.45% also. It also is financed in part by monthly premiums deducted from Social Security checks. The Centers for Medicare and Medicaid Services is the agency in charge of the Medicare program, but you apply for Medicare with the Social Security Administration. To learn how the Medicare program works, you may want to watch the Medicare video also in this YouTube channel. Let's talk now about Supplemental Security Income, or SSI. The SSI program makes payments to people with low income who are age 65 or older, or are blind or have a disability. Even though Social Security manages the SSI program, SSI is not paid for by Social Security taxes. It is paid for by U.S. Treasury general funds, not the Social Security trust funds. SSI makes monthly payments to people who have low income and few resources and are age 65 or older, blind, or disabled. Disabled or blind children also can receive SSI. The basic SSI amount is the same nationwide. However, many states add money to the basic benefit. Whether you can get SSI depends on your income and resources. Let's first talk about income. Income is money you receive, such as wages, Social Security benefits, and pensions. Income also includes such things as food and shelter. The amount of income you can receive each month and still get SSI depends partly on where you live. You can call the Social Security Administration to find out the income limits in your state. Social Security does not count all of your income when they decide whether you qualify for SSI. For example, they do not count the first $20 a month of most income that you receive, the first $65 a month you earn from working, and half the amount over $65, food stamps, shelter you get from private nonprofit organizations, and most home energy assistance. If you are married, Social Security also includes part of your spouse's income and resources when deciding whether you qualify for SSI. If you are younger than age 18, part of your parents' income and resources is included. If you are a child, some of the wages or scholarships you receive may not count. If you are disabled but work, Social Security does not count wages you use to pay for items or services that help you to work. For example, if you need a wheelchair, the wages you use to pay for the wheelchair do not count as income when deciding whether you qualify for SSI. Another requirement for receiving SSI relates to resources. Resources include real estate, bank accounts, cash, stocks, and bonds. You may be able to get SSI if your resources are worth no more than $2,000. A couple may be able to get SSI if they have resources worth no more than $3,000. If you own property that you are trying to sell, you may be able to get SSI while trying to sell it. The Social Security Administration does not count everything you own in deciding whether you have too many resources to qualify for SSI. For example, we do not count the home you live in and the land it is on, life insurance policies with a face value of $1,500 or less, usually your car, burial plots for you and members of your immediate family, and up to $1,500 in burial funds for you and up to $1,500 in burial funds for your spouse. Other rules for SSI include where you live, your status in the country, eligibility for Social Security or other benefits, if you live in certain types of institutions, and there's other rules too. Here is a note for people who are blind or disabled. If you work, there are special rules to help you. You may be able to keep getting SSI payments while you work. As you earn more money, your SSI payments may be reduced or stopped, but you may be able to keep your Medicaid coverage. You also may be able to set aside some money for a work goal or to go to school. In this case, the money you set aside will not reduce the amount of your SSI. Blind or disabled people who apply for SSI may get free special services to help them work. These services may include counseling, job training, and help in finding work. If you get SSI, you might be able to get help through the Supplemental Nutrition Assistance Program, also known as SNAP, formerly known as food stamps. When you get SSI, you also may get Medicaid, which helps pay doctor and hospital bills. Your local welfare or medical assistance office can give you information about Medicaid. If you get Medicare and have low income and few resources, your state may pay your Medicare premiums and in some cases other Medicare expenses such as deductibles and coinsurance. Only your state can decide if you qualify. To find out if you do, contact your state or local welfare office or Medicaid agency. You also may be able to get extra help paying for the annual deductibles, monthly premiums, and prescription co-payments related to the Medicare prescription drug program, known as Part D. You may qualify for extra help if you have limited income, tied to the federal poverty level, and limited resources. These income and resource limits change each year and are not the same as the SSI income and resource limits. You can contact the Social Security Administration for the current numbers. If you have both Medicaid with prescription drug coverage and Medicare and SSI, or if your state pays for your Medicare premiums, you automatically will get this extra help and you don't need to apply. If you have worked and paid into Social Security long enough, you also may be eligible for Social Security benefits while you are receiving SSI. This presentation does not cover all details about Social Security benefits. If you have any questions, please make a note of the following resources for additional information. I hope that this presentation was helpful to you, and thank you.